Hey folks, welcome to Money and Politics, and guess who is back in the seat today? Finally got all my technical issues put away. Sorry that I've been missing you for the last couple of days. It's always good to be back with you. And tonight, I'm still kind of playing catch up, so I haven't had a chance to be as focused on a number of things that I would like. So I'm going to cover a couple of things somewhat briefly today, and we'll go from there, and then I'll be progressively getting caught up. I would say this, and let me bring up my email. I have been getting a number of very interesting suggestions on stocks, and I was looking at some last night and communicating. I'm also looking to do again some interviews that I had planned to do before now, but like I said, my computer just for whatever reason just quit connecting to the internet, and now it's hardwired. So hopefully there might be other issues, but it's not going to be the internet connection anymore. So that's good news. Well, let's get right to it. And we have Humble today going down a bit after some study. Look at this interesting price action for the day, and where we have just this nothing going on, just kind of flat, holding, bouncing up and down by a penny or two. And then we shot up late and went to almost $1.70, and then came back down, fell way down and way up, and who knows what was going on there in the last hours, moments of the day. But there you go. The other thing, since I've been gone, and what we had a comment yesterday from Brian Foote, that Brian's going to be rolling out the red carpet for stock analyst Rob Luna. And as he says here, Brian Foote says, looking forward to showing him the new Humble headquarters and giving him a look at what we'll be doing on building the future. And that's going to be happening on June the 17th. I believe that is on Thursday. And Brian Foote said he would be putting out a short video of that, roughly 60 a minute to 90 seconds, that he can pop up on social media, and that he would also be sending it to Fox Business. So if they want it when Rob Luna is next on the program with Fox Business. So I would say, where are we now? We are where we are. What I like, and I think everyone likes, is that when we look at the price action of Humble over the last 5 days, we've been up. And it's certainly a big difference from that period of time between when we were in February through May 20th, where it was just down, down, down. But if we look at the month, now we're close to a month out from that low of May 20, and up from 76 cents to $1.63. And just yesterday, we were at $1.71. So you had almost a full dollar's growth on a 76-cent investment. As I often say, folks, if only we knew we could be billionaires by August. But we don't know. And, this is why we look at a number of different stocks. One of the stocks I've talked about has been DIG. So here's where DIG is today, down slightly, 1%. We use DIG, I would say it's on the oils, right? A leveraged ETF on the oils, just in case you're joining me more recently here. And when we're talking about inflation, oil would be somewhat of a inflation hedge. If inflation came, the price of oil would go up. You're seeing that, I presume, as you go around the country. You're seeing that at the gas pump. I just saw gas was at about $1 or $3.29 at my local gas station. It had just recently been $3.19, and frankly, it wasn't that long ago. It was $2.50. So we see the gas going up. I hope that's not going to stay. But remember that this was a 2-for-1 split in just not too long ago. I don't have the date in front of me. So when this was $63 back in November, it is now the equivalent of $151 or so, $152 a barrel compared to the $63 back in November. So when we look at a 6-month chart, you can really see that. And I don't propose that everything you should be investing in is just humble. I want you to make money. And as I have said before, even when humble was down, dig was going up, and that really helps to balance you emotionally, because it's not just the numbers of how much, what's the price per share, what's the earning per share, and all of that, which is the technical analysis. I'm here to teach you, and I've been teaching you, for those who've been watching me, that we have to master our emotions. And helping to master your emotions is to be not only financially diversified, but to be diversified in the makeup of your portfolio and to be diversified emotionally, so that you will have some things giving you some joy when others are not. So we have here, and this is one we haven't talked about for a while, there's a penny stock, Interscope Hearing Technologies. This is the earphone people for hard of hearing. And this had been in the dumps, and one of the things hanging over it for the last number of months, the sword of Damocles, so to speak, was that they didn't have their financials in order. And thanks to our friend Scott Kugelman, who sent me a note today, he put it on Twitter, that the management has been getting, they're not fully there yet, but they have been getting their finances in order. And I think they have been reporting some reasonably good earnings. I was just looking to see if we had them there. But you can see the price action here for today, and it did go up nicely, almost 21% there. Of course, this is, like I say, it's 2.45 cents. But look at the chart for 5 days, where you could have really had, quite an investment. I mean, when we're talking just last Friday, you could have been buying this for $0.015 per share. So, you could have bought a boatload of this, folks, and now it is up virtually double from that, not quite a double. But look at what we did just in the last month, where that came to where it was down. Again, that's kind of June 4th. Anyway, you get the price action. You can see the increase we've had, and so much of it, again, we had the jump coming right at about noon today when the news came out. Ironically, they don't have the news posted down here, but they did. They did come out with it. So that's what was driving that. So we looked at DIG. We looked at Interscope. Where do I think this? I think this is highly speculative, folks. I think it would have been good to be buying it at $0.015, and I'm sorry I wasn't pounding the table when my internet went out. But where could this go? I think it could still get you some decent money. It wasn't that long ago. I don't know if we can show it in a month chart, when it was up to almost a nickel. Here was about 6 cents back in February. It got up to, 7 cents there? Am I reading? No, that's where it was almost a nickel back in about 2 months ago, roughly, in April. And for the 52-week high, this is almost a dime, 0.098. So now that they're getting their act together, I do think that this company could, not saying it will, but it could give you a decent rate of return, especially at this price point. I would maybe put some money in. Obviously, it's low. If you got your kids and you want to get them invested through, a joint account, and they want to put, $10 or $20 into this, they could have some fun following their stock. And it certainly wouldn't be that hard for her to believe that it could go up to 3 or 4 cents, and that would be close to a double. So again, this is high risk, act accordingly. What else? Let's take a quick look, because some of these stocks I'm talking to you about today have been, like Humble, kind of languishing for a long time over the spring. And what I want to do is kind of follow up here and give you just kind of an update. And the other one that I think has a lot of potential. Again, this isn't Cisco. This is a stock that has risk to it. But FuboTV, and Fubo combines an app where you can be watching sports along with online gaming. So FuboTV, and it has moved of late, and you can see just the other day how it jumped, and it had been at $27, now $29, but you're going to see it more pronounced. Look at just a 1 month chart where it has virtually gone close to a double from a low of about $16. And as we see, just even a little, earlier this week, it had hit $30. So where could this go? This could go quite a ways, folks. It's been up to $62 in the last 52 weeks. And let me look at a 6 month chart. It hit this peak and then came down. I think that's where, 62. So, by the way, look at this price action again. How many times have I told you, if you got a stock that you're in and it goes vertical, I would be taking money off the table, because almost always it will mimic what it does on the upside. It will mimic on the downside. When you get a stock that goes parabolic, that price action is not sustainable. And so what we are seeing, let me go to a month, this is sustainable. This is that nice steady growth that we want to see. And by the way, speaking of that, that's also what we're seeing going back to Humble for a minute. Unlike the price action we saw back in February, we're getting far more stable growth, and that's what we like to see, okay? There's no big spikes. If we go back 6 months, there we go, the big spike in February, not sustainable. It goes down, shot up here almost again. These peaks, if you want to make money, sell when you see a stock go parabolic. It's not going to go up forever. You might leave a little bit of money on the table, but chances are when it falls fast. And chances are you're not going to get out fast enough to make that money. And we've seen that time and time again, and we see it here again. And Fubo, as I pointed out, it fell, and it fell fast. So you get sometimes just a day or two. This was December 16th. It shot up, and when did it crash? By January 4th. So you might have had, a handful of days in there. But folks, it's best get out and then come back in and buy the stock at a cheaper price. Okay, what else? I think that might be, I got Dig, I got FuboTV, I got what Humble's doing, and the earphones, Interscope. So with that, I've gone almost 14 minutes already. I'd say, as I mentioned earlier, if you want to write me with your ideas, I'll have, I hope, a little bit more time coming up here. And there are some very interesting ideas, and I didn't want to bring them up today because I literally just got done with another production right before making this one. And I didn't have enough time to do justice to the research. But I like, there's about 3 or 4 ideas that I recently got from Humble Nation. And they sound very good. Some of the ones that I got in the early part when Humble was a real penny stock, I mean, literally like a dime and 20 cents, everyone was wanting me to go into some things that were just kind of screwy ideas, frankly. I mean, there were just other crazy, wild-eyed penny stocks. And as I've said so many times, I haven't historically been a big fan of investing in the penny market. What I would say now is there are companies that are worth investing in. Some of the ones I'm going to be taking a look at that I've been I'll do later that I was told about are not penny stocks, but some are low-priced stocks, some are intermediate-priced stocks, intermediate maybe being, $16 to $20, somewhere in that range. Occasionally, I'm going to drop as I did with the TQQ, something that's like $100 stock. But in this day and age, folks, let me remind you, when you have all the online brokers that are not charging you a commission, there's nothing wrong with buying one share of a good diversified stock, especially when you have the TQQ, which is a leveraged index. The TQQ, the UPRO, you could even do the UDOW, UDOW. These are all for expanding your portfolio, buying a whole lot of different companies with one fell swoop. One investment gets you the NASDAQ 100 or the S&P 500. And that's a good way to give some stability to your portfolio. So with that, once I get started, I'm always reluctant to stop. But if you haven't already subscribed, I hope you will. If you haven't already followed me on Twitter, I hope you will. And in the meantime, it's good to be back with you. It's good to be in the summer. I remember I was out here shoveling snow and then coming in to do these reports early on. So now we have really a very nice summer coming along. And with that, just send me your notes as far as either you can DM me, direct message me on the Twitter, or email me. And in the meantime, folks, let's make some money. Humble's on the way up, I believe. And I meant to say, by the way, relative to next week's with Rob Luna, I think this would be great. I forgot to say this. I'm glad Brian Foote is doing this. Smart move, Brian. I think this would be good if you periodically gave an open house tour like this to some other analysts, because one of the challenges, and we've talked about this before, is getting the Humble message out. And now that Rob Luna is going to be doing it, I think, it kind of opens the door for others in the investment house. And, Peter Lynch, the great investor, used to talk in his book about how he would go out and kick the tires and take a look at whether it was a factory or just whatever it was, and talk to management. And as an analyst, analysts are like being reporters. I'm a reporter, right? If I go down and sit to somebody and I want to hear about the bill that they're doing, and it's a green energy bill. Well, what's it going to do? What's it going to cost? What are the details? This is like being an analyst, is just being like being a reporter, and you're talking to the source, and the source is the management of the company. So that's what's going on here. It's no more fancier than that. So folks, have a wonderful night. Great to be back with you. I think I'm going to not have to have the technical problems as we had before, and we will see you again tomorrow night. Until then, have a good night.